What's going on, everyone? Ty here. Happy Sunday, November 6th. Very special day. Not because my Giants, they have a bye week and they can rest, but it is my one and only, my beautiful wife's birthday. Shouts out to her. Happy birthday. So let's get into it. We are 4.5 hours away from the market opening. When I say the market opening, futures market. So, of course, that's going to give us an indication on where the market can open to begin the week. I guess I would say the market did rally on Friday, so we ended it on a good note going into the weekend, along with beautiful weather. So, how can you complain? As you can see on the left side of the screen, the VIX did end up lower. So, of course, it's inverse correlation, VIX lower, market higher. So we go from there. I wanted to point out today the CPI, the Consumer Price Index. A lot of people seem to be confused on why inflation is going through the roof. Why are prices going through the roof? Why does everything seem more expensive? So we're going to have to go back in time. I don't know if you remember something that happened called COVID-19 and then the CARES Act. We were talking about stimulus. Oh, send the stimulus this, send the stimulus that. I see it was kind of like a misconception where the Treasury will pump all of this money into the economy, and we thought we were getting off free without any consequences. So I want to go over the CPI, just the basics of CPI and what that means and what it tells us for the economy. Now, before COVID-19, before the CARES Act, before they pumped trillions of dollars into the economy, let's remember things were failing, right? So it's the government's job, the Treasury's job, to come in and stabilize the economy. And this is exactly what they're doing at this very moment, but it's a reverse effect. So, businesses were shutting down because of the pandemic. Airlines, hospitality was literally 2020 was the worst year for that industry in regards to profits because no one was traveling, everyone was staying home. Now, what does that mean for the economy? The economy slowed tremendously. Job losses were piling up, and unemployment rate was going through the roof. So the government had to step in, of course. Now, what does that mean for the economy? You pump trillions of dollars into the households, like it's happened in 2020. What does that mean for us? We go out and spend. What does that mean for businesses? Businesses are now producing more. They need more manpower. They're ordering more materials. They're ordering more supplies. With this, they have to hire more people. So what are businesses going to do? If their expenses increase, they're going to pass that bill on to us, the consumer. So what does that do for prices? That's going to increase the prices. So as that trickle down effect, more money is put into the economy, interest rates are lowered, more businesses are hiring more people, prices are going to increase. So of course, that's going to cause inflation. So right now, what we're experiencing a tail end that inflation has gotten so outrageous that the Fed had to step in. And what do they do by stepping in? They have to raise interest rates. What is that going to do? Banks, companies, businesses are going to borrow less because money is now more expensive. So with them borrowing less, that's less money for them to invest. That's less money for them to order raw materials. That's less money for them to hire employees. They're going to want to save because they're going to be smart about being budget conscious to keep money on the books. So what is that going to cause? It's going to cause layoffs. We're seeing throughout the news, throughout the week, companies are pausing hiring. They're laying off 10% plus of their workforce. This is all a cycle. If you go back to 2008, if you go back to the tech boom in 2000, companies lay off. Companies, they have to preserve their savings to get through a possible recession, to get through possible bad times. What is the Fed going to do? They're going to sell bonds. By them selling bonds at a higher interest rate, and you'll see that record numbers, they need to tighten up that money supply. Like I said, we have to go back in history a couple of years. We're going to go back to about March of 2020 because that's when the CARES Act was passed, and that's when the first round of stimulus checks were put into the economy. So let's start with looking at the CPI. Let's go into housing, right? Of course, more money into the economy, more money is spent. Of course, you're going to raise prices here. So if we look just specifically at April of 2020, a month after stimulus checks were put into the economy, look at this rise here. This is just for rent of primary residences in the United States. This is a CPI chart here, right? Let's go to food and beverage. More money into the economy, more money in households. What is that going to do? We're going to go out to eat. We're going to shop more at grocery stores. So of course, these companies, they need more employees to deliver these services. What is that going to do for prices? It's going to raise prices. Look at the sharp increase. Look at this rally in the CPI for food and beverages in the United States, right? Let's go to, let's see here, meats, poultry, and fish. Remember, there was a situation where There was a chicken wing shortage or whatever. Look what it does to prices here, right? We're here in February, we're here in March, April. Look at that increase. Now, this here, whatever happened around August of 2020, there was a sharp decline. But now look at this rally in October of 2020 of prices, food, more money in the economy. That those dollars are chasing a very scarce amount of resources. So of course, that puts us in a position where price is going to increase, supply and demand. Right now, let's go to transportation. Let's go to new vehicles. Of course, you give us free money, you give us some stimulus. That's a down payment for a new vehicle. Look at the price increase. Look at that CPI data for that sharp increase. And this is all around 2020 after the CARES Act was passed. Look at this number for used cars and trucks. Look at this here. If you go around that same time, April of 2020, March of 2020, this is what's driving those prices up, right? Those consumers, they have the funds. We need the raw materials. And at the same time, you have to remember the bottleneck that happened where a lot of like the ports were closed. So anything that was imported, it's behind, it's on back order. So those are limited supplies, which is going to drive the price up even further. So there's so many factors working at this point that has gotten us to this here, right? And then even just moving forward, when we're seeing the increase of interest rates, we're going to see this trickle down effect a year from now, a year and a half from now. We're not going to see an immediate effect. The Fed, Powell said it's too premature to think about even pausing the increase of interest rates. So it sounds like what he's saying, interest rates are going to go even higher. That's going to make money more expensive. That's going to cause us, consumers and businesses, to take less loans from the banks, less money in the economy. Mission accomplished because they're taking that money out of the economy. But money is going to be more expensive. Raw materials are going to be more expensive. There are going to be layoffs. You see like I said, look in the news. You're going to see in the tech sector. You're going to see even with Twitter. Everybody's giving Elon a bad rap, trying to highlight that he's laying off Twitter employees, but that's across the board. Right? Let's actually go to a special index to see the purchasing power of the consumer dollar. More money in the economy devalues the US dollar. Look at this steep decline of the US dollar. This is going to make sense to any of us. Look at gasoline. Remember, prices were surging with gas, record numbers. The CPI is telling you this here, this huge increase. Something interesting that I want to point out, which is correlated to fuel prices. You see the steep increase of gasoline prices? Let's look at airfare, airline prices. We're in transportation, airfares. You see that steep increase of airfare, of airline? Why is that? Because the airlines are now spending more for this is their most expensive expense, fuel, jet fuel. So if that increases, all they're going to do, just like any other company, corporation, business, they're going to pass that on to the consumers. And there's no coincidence that correlated. There's no coincidence that this looks the same. This is interesting. This is why inflation is at alarming rate. This is why the Fed had to step in. So if you were ever confused as to why inflation is at levels, that it's at now, and why things are more expensive, it's because we took those stimulus checks. Let me know what you think. Comment. Let me know. This is very interesting. Thank you for your time. Like I said, my name is Ty. Happy Sunday. Happy birthday to my beautiful wife. We're about to eat good. Peace. You have a good one.